that you think AI is like awesome. It's going to be a big part of their story going forward. If the AI thing doesn't pan out, right, then you're stuck with just Starlink basically. Because Starlink does make money. That's actually their profitable part. If Starlink separated from SpaceX and just did its own thing, it actually wouldn't be necessarily a terrible investment, depending on when you bought it, right? But when you're piling all this other junk, and then if you say absorb Tesla, it becomes a really, really bad proposition, right? So that's what you're buying it for now, is Elon Musk's name, hype, and what you think about AI. Now let me give you a pumper's point of view. So this would be King Fluffer Farzad. He says, if you're angry that Elon Musk is now a trillionaire, you have the wrong mindset, according to Farzad. Elon has becoming a trillionaire literally has nothing to do with you. The global economy is worth 100 trillion per year. That's roughly 1 quadrillion in global assets. That's 1,000 trillion. Elon's net worth is equivalent to 0.1% of the world's total asset base, and blah blah. He goes through. It's from Sakat. Says SpaceX just did the biggest IPO in history while having negative revenue. They literally have no PE ratio. It's based entirely on future hype, and that future hype pans out only if Elon succeeds in buying our government to ensure SpaceX gets all the contracts. So just think about that. When people like Farzad say, wow, he's developing wealth out of thin air. Well, what about tax dollars? Where does that come from? That comes from all of us, right? So I thought this was a really good response to someone like a Farzad.
Jim Chanos, honored to have you here. Let me just cut to the chase. What is a distinctive feature that makes SpaceX remind you of Enron?
Well, I don't know that it reminds me of Enron, Tom, but it reminds me of the Enron time frame. How's that? In that I've always said that Wall Street has a printing press too, just like the Fed. It just takes a while to get going. And one of the things that I think SpaceX is ushering in 2026 is massive equity issuance. And historically, without a doubt, in the 20th and 21st century, anytime you have seen massive IPOs and secondaries relative to the size of the market or the economy, investors generally have been advised to be a little more cautious or reduce their risk. So the 1999, 2000, 2021 for the first half of that year during the meme stock and SPAC craze. We are now going to break records in 2026 for IPOs and secondaries. And SpaceX, of course, is the granddaddy kicking it all off in a big way. But we're going to see OpenAI and Anthropic and probably some others.
So basically what he's saying then, when you ever see these big IPOs, that's why I've been telling you guys, this is peak bubble week. It does not bode well for markets, right?
Today is just an early milestone. It's the beginning of the first, it's the end of the first chapter. And, next phase is we get to use Starship to try to build infrastructure all around low Earth orbit, explore the stars. Hopefully, your grandchildren, my grandchildren get to do science field trips on the moon someday. And so in terms of the share price today, look, it's early trading. I don't know where things will end up, but it's really just I view this as a very early intermediate milestone for the company.
The bulls, the pumpers, you're betting on whether or not our grandkids are going to have classrooms on the moon. But don't worry about share price, right? Let's just think about the moon. Okay.
Let's not go all the way out to 2040. I think it's 160 billion, which is a little more pedestrian in 2028. And remember, something extraordinary happened. The last time I was on the show, just a couple weeks ago, I said everything about the IPO changed. Why? Because they had moved into the category of being an AI hyperscaler. In literally 6 weeks, they went from not in the game to $27 billion of AI hyperscaler revenue with big deals from Anthropic and Google. What is the one thing we can all underwrite? I think we can all agree Elon Musk and the team at SpaceX are as capable as anybody on the planet. Jensen has said they're number one at standing up terrestrial data centers, at standing up AI data centers. On my part,
right, so suddenly we're a data center business, and this guy's going on like, man, that data center business is so awesome. Oh, we're all going to make money, hyperscale, blah, 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 right? And actually now we see the share price at 158. You remember the day started at, what was it, 174 with Kramer. Do you guys remember this?
At about a week, 10 days ago, the vast driver for the SpaceX TAM in their prospectus was the enterprise solutions for XAI, basically Grok, what the models produce, right, the software. And instead, they basically did a 180 pivot and said, we are going to lease out our capacity to Anthropic and Google. And that's the NeoCloud model, right? That's you're an equipment lessor. And that is a much lower valued business in the marketplace than being a model company or a hyperscaler. And we've been following data centers for a long, long time. And basically, it's a finance business, right? You're buying the chips from NVIDIA, somebody else, and then you're leasing them out to Anthropic or it's a rate of return business. It's not a super high tech business. Yet 22 plus trillion of the 29.5 trillion of SpaceX TAM in their prospectus was based on that business.
Right, and so what he's talking about is total addressable market and kind of the argument that you make for buying said thing. Before it'd be software-based Grok, and now it's like buy chips from NVIDIA, and you can buy that by debt or whatever, and then the bet would be I can rent it out to someone else. That's basically what it ends up being.
Financial advisory firm, would you be advising institutional investors, retail investors to own this one?
Well, what we do is we try to give people a framing to understand their decision. And by that count, the simple math obviously doesn't add up. This is a very expensive stock relative to any rational measure of value. But we're talking about Elon Musk, who has a tremendous track record of not just success, but convincing people that success is durable. So it's not a calculus based on valuation, it's a calculus based on faith.
All right, so if you want to make money decisions based on faith, have at it. Good luck. But again, you're already down if you bought it at the top.
So like anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
So you're buying it for Musk, and I actually hear fanboys say this. Oh, Chris, you're so dumb. Look at Tesla stock. Tesla stock is awesome. And that's the argument that they make. So basically, they don't address any of these things about that SpaceX is overvalued. They just say, well, look how awesome Tesla is. And I say, fine, look at Tesla. They're already failing. They're getting out of the car business, going into the human robot business. And Elon Musk is turning his focus away from Tesla, going into SpaceX.
Historically, returns have been awful at those valuations.
You mentioned earlier the dot-com bubble. Are we doing dot-com bubble 2.0 right now?
Oh, this is much bigger. The AI build-out relative to the TMT build-out of 99, 2000 is multiples, even as a percent of the economy, GDP. And an important thing to point out is that when you get these CapEx booms in technology, they're tremendously accretive to earnings. And there's a simple accounting reason why. That is, when Tom buys chips for his data center from NVIDIA recognizes that as revenue and profit. Tom capitalizes those expenses and writes them off over 5 to 10 years. And so you have a mismatch where the same dollar in a CapEx boom is recognized as profits by one entity and deferred by the same people expending the dollar. And that happened in 90, 98, 99, 2000. From the middle of 98, S&P operating earnings rose 30% to the middle of 2000 over the 2 years. From the middle of 2000 to the middle of 2001, when order books got pulled, S&P earnings dropped 40%.
Was that too much accounting for a Friday? I think so.
I'll leave it at I'll stop at that.
Now, what's funny there is the Bloomberg guy, because Chanos is actually illustrating the key point here, why numbers and how numbers get pumped up, and the Bloomberg guy is trying to, basically blow that off. If you understand the essential accounting / math of this one, NVIDIA, right, can sell chips, we'll do the example of Elon Musk, and then suddenly it looks like, oh my God, look at all of this capital expenditure, look at all this investment, look at all this, money that a company is making. One company sold chips to another for whatever, $100 million or whatever, doesn't matter. The other company then will take that money, and they won't necessarily count the $100 million as a full expense in the first year. They'll do that over 5 years. So one company makes $100 million. The other company in their books would say, oh, the expense is only 20 million, right? And then you'll do that 20 million each year over 5 years. The thing is, though, the next year, say year 2, let's say no one buys any chips from NVIDIA, so that revenue is zero at that point, right? And then the company who bought the first year, the second year, they'll basically have an expense of 20 million, and so now suddenly you're down 20 million. And then the next year after that, again, no revenue, no one's buying any chips anymore, and you're down yet another 20 million, right? And it goes out over time. And so if you understand the sort of basic accounting logic here, you'll get how numbers can go whoop, and then suddenly really, really crash. So that's sort of what's going on. I do appreciate your time, everyone, and I'll catch you all in the next video.
Hello and welcome to Why Is This Happening with me, your host, Chris Hayes, and welcome back to our ongoing series, Why Is This Happening? The Mind-Body Problem, about all of the implications of the AI boom. You have probably seen, well, I don't know if you have, but maybe you've read the book, The Big Short by Michael Lewis, or seen the phenomenal movie by Adam McKay, which is like, I think, genuinely a classic, The Big Short. And the tale there is a chronicle of a disparate group of what you might call our kind of financial dissidents, who in the sort of era of 2006, 2007, as the housing boom is going and everyone's making a ton of money, start to sniff out there's something very deeply amiss, deeply wrong. And the more information they get, the more convinced they become that everyone in the market more or less is wrong, that this entire money-making machine is about to collapse in on itself. Because they're people in finance, they take bets that it will collapse, and those bets prove to be accurate. It's a very satisfying tale and a satisfying book and movie, because it's a kind of David and Goliath, and you sort of get to follow the prophet as the prophecies come true. And the reason I bring all this up is we're in a boom right now with AI. I mean, the amount of money that's being put into it is staggering. And I think the broad amount of the financial system and the press thinks that it's going to pay off. At least, that's basically been what markets have priced things at. If you look at the stock of the big AI companies, and particularly NVIDIA that makes the chips this all depends on, it keeps going up and up and up. It's been a little down recently. But there are, just like there were at the housing bubble, there are dissenters and dissidents. We're going to talk to one today. Now, the thing about being a dissenter or dissident against this sort of conventional wisdom is you could be wrong. There were people that thought, for instance, the internet was never going to amount to anything, or that personal computers were a ridiculous technology. And in the long view of history, it's always a fine line between crank and profit. It sort of depends on what happens in the end. But given the fact that there is so much money at stake, and because I think the maximalist view that this is going to end in tears is one that people get the least amount of exposure to, I wanted to spend some time reckoning with that view today with my guest, Ed Zitron. Ed is the CEO of EasyPR. He's the host of the Better Offline podcast, and he writes the Where's Your Ed At newsletter on Ghost. And I would say that he is one of the foremost AI bears, or even AI haters on the whole internet. Is that fair?
I think that's fair. But I really hate bad software. I love technology. I owe my life to technology. But the current state of the tech industry sucks.
You're a tech person. You were a gaming journalist for a little bit?
Yes, I was. I wrote about video games in England for, about 5-6 years. Moved to America in 2008. Great year. Fantastic year to move to America. And yes, it's strange watching what's happening. And it feels like, as I watch the pieces fall together, it's all been kind of working up to this. Because the AI bubble is a symptom of a larger problem with the software industry. The hypergrowth era is ending. We have seen software as this thing will always grow exponentially. So every single bubble is looked at it through the same lens. You say, metaverse will grow exponentially. NFTs will take over all culture. We won't buy physical things anymore as far as collectibles go. We'll only have these digital versions. Everything's seen through what I call the growth economy, the growth at all cost mindset. And I think we're coming to the close of it.
Let's stay there, because I think one of the reasons that I hear skepticism about AI from people, and I think is irrational, is that we did just go through this huge hype cycle.
Yeah.
That was, it's a little bit wiped from memory, but before AI, during COVID, there's a huge amount of money sloshing around the economy because of all of the money that was being directly injected, both through fiscal stimulus and the Fed. And people were spending all their time in front of their screens. And there was this huge boom around the metaverse, blockchain, and non-fungible tokens, NFTs.
Yes.
What do you think the takeaways from that sort of boom-bust cycle are?
So, a little bit before the metaverse, there was another bubble that other people forgot about, and that was Clubhouse. So Clubhouse was this audio-only social network that if you talked to venture capitalists at the time, oh my God, this was the biggest thing ever. It was going to be worth $1 bazillion. It was radio too. Now, nobody went and looked up how much radio makes or what the revenues were, or really anything. But they got celebrities on, they did everything they could, and it was very clear the venture capitalists were pushing this so that they could get a big acquisition. Now, never happened, and Clubhouse has kind of fallen into irrelevance. With NFTs, with the metaverse, people forget that Meta used to be called Facebook. We still call it Facebook. They changed their entire company name to Meta. One of the craziest things in history, and we just don't talk about it. It's insane that happened. You had people on CBS News being like, yep, the metaverse is here. We're all going to live in the metaverse. It's very real. It's going to happen. And the actual experience was a very bad virtual reality experience. But I feel like the tech industry has kind of been LARPing for the last 10, 15 years. They had
LARPing meaning live action role
yes,
playing,
exactly.
like pretending.
Going through the motions, because you had the era of smartphones and mobile apps, huge deal. You had the era of software as a service, SaaS. These were the big revenue drivers of the tech industry. It was a way to get more money out of people because you had a subscription service, or you had an app you could buy on your phone. Most of those all have monthly subscriptions now.
Convert to subscription,
exactly.
Yes.
So it was a way of getting people away from that troublesome thing where they only paid you once. Nevertheless, this worked for a while. And so that worked. And then apps worked, and then nothing else really worked. We kind of started running out of kind of hyper-growth ideas. We haven't really had one since, like, I don't know, LinkedIn maybe. There are probably some examples, but we just stopped having big things that worked. So the tech industry did what it did before. Hire a lot of people, put a lot of money into things, buy a lot of things, buy little companies. The Activision Blizzard acquisition from Microsoft was claimed as a metaverse thing, which was very silly, because if the metaverse is all video games, that's just so much. But it's the tech industry doing what it thinks works, and I think we're getting to the end point of that.
So here's what I want to talk a little bit. I want to wait to talk about the tech,
right,
and then just hive that off from the economics of it. But just stay on this for a second, because to me the big difference is no one could ever really explain to me the use case of the metaverse.
Right.
You know,
yes.
People would sometimes be like, yeah, I'd be like, well, what do I do with it? And people would say, you know, with crypto, it's like, well, can I pay for a cup of coffee with it? No, you can't really do that. No, it's essentially, there was a little bit of talk of like the blockchain is going to replace contracts. And I was like, but is anyone actually doing that? No.
Yeah.
And even the metaverse, you know, you kept sort of saying like, well, what's the use case? What's it do? No one can ever answer. I don't feel like that way with AI. Like, there are use cases. In fact, I've used it for use cases. And it seems to me like there's a much clearer, like, okay, do this doc review. Here's 1,000 documents. It would take a human to go through them. It can read and synthesize. Now, the question of whether it could like do it well or not is a different question. But to me, the difference is that you can at least articulate what it's for in certain circumstances or reasons or places it might be useful in a way that, for me, the metaverse never did.
So there are uses for large language models. If you remove all of the hype,
yes,
there are things they can do. The problem is here's a little challenge for you. Go and talk to a bunch of AI boosters and ban them from speaking in the future tense. Don't allow them to say anything about this will, it might, or it could. Say what it does today. Because when you do that, it's not really clear what's changed. So, yes, you can use it to review documents. The results are not great, or maybe they are. You actually don't know, because you didn't read the documents. A thing that is based on statistics did. The idea that you can rely on it is inherently broken, because OpenAI's own research says hallucinations are a part of these things. They're never going away. You have people in the AI industry claiming hallucinations are going away. They're just wrong. OpenAI said it. You going to argue with them?
There's a recent paper I was just looking at yesterday that says that even when you, because when I use AI, I do use it where you sort of like gate the sources. Mm-hmm. And there's a paper I saw yesterday that like even when you gate the sources, right, when you're saying just use these sources,
right,
you cannot purge a hallucination.
No, and even with coding LLMs, because this is one of the most annoying debates ever, is the usefulness of LLMs within coding. And I think the big thing with the AI LLM coding debate is you're beginning to find out that there are, I don't want to say a lot, but there is a contingent of software engineers that might not know a lot about code or might be getting by with not a ton of information. To them, this might seem magical. There's an amazing writer called Nick Suresh who did he did this amazing blog called I Will Effing Pile Drive You If You Mention AI Again. And he made the point that this is something that has its uses for the little things, but the moment you start expanding it to building entire things for you and writing all this code for you, you are just kind of kicking the can. You're still going to have to read all this code to make sure it makes sense. Or alternatively, you could not read it and just hope it works. Software can function when the code is bad. Doesn't mean it's secure or stable or efficient, or indeed that someone else coming along in the future to read it can understand the intention, because there was none, because the large language model wrote it.
Right. The sort of quality control question, which you get in research, seems to be a big thing, right? But let's put that aside for a second,
okay.
Right? Is that solvable, right? Is a quality control question solvable? Is sort of, we'll put to the side. It seems to me that it's worthwhile to just for the next part of this to distinguish between, is a tech useful or even transformational? And is the current financial investment in it justified,
right,
as distinct questions?
Yes.
And two examples come to mind. There was an enormous railroad boom that happened in the 19th century,
right,
in which an enormous percentage of the country's entire GDP went into railroads.
Mm-hmm.
It completely overbuilt, and it led to a huge crash, and that crash led to a Great Depression. It doesn't mean that railroads weren't useful. In fact, railroads are quite useful.
Right.
But it also is the case that you can have a useful technology that leads to a boom and bust. The internet being another example, right? It isn't the case that the internet proved not to be useful. It's also the case that, like, there was a huge boom in 1999 and 2000, right?
Right, and I have this thing I've been saying, the beginning of history.
Right.
It's not fully connected to Fukuyama, but nevertheless, I don't think it's instructive. I understand why people do it. It's how human beings work. I don't think it's useful to look at these previous booms, because when you put trains on the railroad, sometimes the train didn't just randomly go up or into the ground. With the original internet systems, back in the middle of 2025, a guy called Jim Covello from Goldman Sachs did a great piece, along with some other analysts, called Gen AI, Too Much Spend for Not Enough Gain. And I paraphrased the title there. And he made the point that when the internet did cost a lot of money, at the $64,000 Sun Microsystems servers, nevertheless, that capital outlay was completely different, but there was also a very clear path to utility. It would be the dispersion of fiber optic cable. It would be the access points, the actual things being built so that people could get to the internet and high-speed internet. On top of that, the same thing happened with smartphones. Covello notes that in the early 2000s, there were clear roadmaps, smaller Bluetooth radios, smaller GPSs, smaller chips, smaller batteries,
right,
that would lead to smartphones. No such path exists for large language models. For that example to make sense, you would have to have a way in which the cost came down and the hallucinations went away. Neither of those appear to be happening, and indeed, the efficacy of these models, their actual outcomes, it's actually very difficult to measure them. The benchmarks are deliberately created for them. And all of the benchmarks for software engineering are focused on one programming language, Python, and very common GitHub issues. So to train for more things, they're having to create specialized data. They're going to have to do that forever, and even then, it isn't obvious if it's actually fixing things.
Right, I mean, this is this problem of, are they training on the test data, right?
Yes.
Are you basically saying, here, take a look at all this data, and then we're going to test you on it, and lo and behold, your performance is good.
Fun fact about that. They actually found that one of the Anthropic models had just started going and looking for the solution. Wasn't trying to solve it, just went on GitHub and did it. Now, people mistake this for intelligence. No, you asked the thing to do a thing and it did a thing.
Right.
It's doing the functions it was told to do.
But that's a great example, because like a year ago it couldn't do that. I mean, it is doing something new, even if it's going to GitHub, right? GitHub, for people that don't know, is sort of this sort of open source library where people share,
where you can host projects. Yes.
Where you host projects and people share code. But like a year ago, it didn't do that, right?
It used the web search tool. It used the tool it's had for a while.
Right.
Perhaps it did something new, I guess, but it's a lateral improvement. It's an improvement on the thing it's already doing. It's not making unique software. Even the Claude Code things you're seeing where people are spitting out websites, there are tens of thousands of website templates and open source software projects. that they're replicating. It did, this is a little bit, I won't get too in the weeds here, they did something called a C++ compiler. And Anthropic said, we made this, we did this. It was a clone of an open source project, and it was less efficient. It was something like 10,000 times less efficient, which is crazy. And these things don't make novel ideas, because if you just look at what has already happened and say, well, based on this, this will happen.
Right.
You'll never...
You can't get out past the arithmetic statistical average.
Exactly, yes.
So let's talk about the scope of the money here.
Mm-hmm.
Basically, paint a picture of how big this bubble is that you say is a bubble, where the money's coming from, and how it's flowing.
So, it's around $1 trillion now, I think, by the end of the year. If you think about all of the venture capital funding, all of the money that's been put into data centers, all of the capital expenditures from Microsoft, Amazon, Google, Meta, and the money flowing through Taiwanese server companies like Honhai, so Foxconn and Quanta and all that. The money is coming from a few places. It's coming from venture capitalists, and I can get into the crisis there soon, private equity, and specifically private credit. And actually, a lot of the money is coming from Japan. Sumitomo, so SMBC and Mitsubishi MUFG. I swear I'm going somewhere with this.
Yeah.
But the money is coming from private equity, private credit, venture capital, and in some cases the hyperscalers themselves. And most of it's flowing to like 3 companies.
It's also, it seems to me that it's also, right, so when you're talking about AI and Anthropic, right, they need to raise capital,
Constantly.
right? But places like Google or Microsoft are spending, Google just throws off a ton of cash, right? So that's a place where they've got this arguably the most profitable business in the history of human capitalism, and they can just sink that cash into more and more investment.
The problem is that's slowly not becoming true. Amazon, I think, is raising tens of billions of dollars of bonds. Google already did the same thing. Microsoft, probably will at some point. Microsoft, I think, is the only one out of them that is no longer, not using debt. That's no longer just using cash flow to pay for this.
I see.
Because none of these businesses are profitable. Not a single one of them. What's really interesting is none of them talk about the AI revenue. None of them. Microsoft mentioned it in 2 quarters. Last quarter of 2024, first quarter of 2025, and then stopped mentioning it entirely. IBM just stopped mentioning their AI revenue. Are they shy? And so, when nobody wants to talk about the money, and nobody can really precisely describe the outcomes, that's when people should get a little concerned.
There's if we talk, say, $1 trillion, right?
Mm-hmm.
And the idea is you're investing all this money, and what does the investment go to? Like, what needs to be built that all this money is sunk into?
So there's 2 things to look at. There are the AI companies, so the OpenAIs and Anthropics of the world, and then the hyperscalers. And so let's talk software and hardware.
Okay.
So AI companies like Anthropic, it just came out, Krishna Rao, the chief financial officer of Anthropic, in their case against the Department of Defense, just said that Anthropic, through March 2026, for its entire lifetime, made exceeding $5 billion. They've spent $10 billion in that period on training and inference. Inference is the creating of the output, fancy word for that. Training is this word that's meant to conjure up in your head this idea of research and development. Training in large language models can mean everything from pre-training, so feeding a bunch of information, to post-training, which is everything from we're going to give you some stuff and test the outputs, to minor tweaks to stop something called model drift, which is just when a model that is trained on static information will eventually become irrelevant. So you need to keep updating it to make sure when you feed it something, it understands it.
And there's actual, huge human intervention here, which is like, no, that's wrong, because you have to kind of train the model to learn.
Exactly. You've got human trainers who are training the models themselves, as in model gives an output and they go, that's a good one, that's a bad one. Then you've got people literally creating training data. Now, where do they spend that money? So this is the top layer, the AI labs. Those ones are spending it renting GPUs from NVIDIA, which are usually, in the case of Anthropic, held by Amazon or Google, or in the case of Amazon and Google, their own custom silicon, TPUs for Google, and Trainium and Inferentia for Amazon.
If I'm Anthropic, I got labor costs, right? I got employees, and then I have to do all the stuff that I want to do, run these models, is very, very computation intensive.
Yes.
And in order to do that computation, I need physical hardware.
Yep.
The so-called GPUs, which are the chip that NVIDIA and others make, which is this sort of frontier next generation processing chip, right?
Yes.
And the way that it works is that Claude and AI rent that
Yes.
hardware.
So it's crazy how much it costs as well, because you may think they want to say that inference is profitable. No one's actually proven this. It's actually quite expensive to provide a user a service. The other problem is coding models especially are incredibly computationally expensive. You've got one user who might be tying up 6 to 12 GPUs, each one costing 50 grand a piece or more. What's crazy and what really makes this different to most software heroes is that your most excitable customers are the ones that cost you the most. And in all of the cases of the AI labs, they're subsidizing them. Claude Code, crazy fact, a researcher called Shellock found this. For every dollar that someone is spending on an Anthropic subscription, when they use Claude Code, they can spend anywhere from $8 to $13.50 worth of compute costs, because Anthropic is subsidizing them.
Right. So Claude, let's stay on Claude Code, because this is important on the business model, right? So Claude Code is, people have been, crowing about it, and almost every engineer talks about is using it. You can do things where you're basically giving it plain language instructions and it's coding for you. The back end of what it's doing is extremely compute intensive.
Yes.
And the expense of that is renting the GPUs, the electricity, right? The storage, the server space, right? Those are the basic.
Usually you pay the company like Google or Amazon directly, but that's the cost.
Right.
Yes.
So that's the business relationship is I'm Anthropic, and I'm paying some other company that's doing all that back end stuff.
Yes.
Right. And the cost of that thing I'm paying them for, right, is can be $13 for every $1 I'm getting in revenue. I mean,
Yes.
I think about this a lot. I use this example in another conversation just with Google and Gemini, where if you say, what's a good Korean restaurant in Brooklyn? Google will show me a Gemini response at the top.
Yeah.
And then there's a Reddit thread that's great Korean in Brooklyn, right? The computational, actual resource cost of just going to the Reddit thread is essentially zero.
Yeah,
basically
tiny amount.
But the Gemini cost was pretty significant to go generate all that computation in the back.
And you've scrolled right past that and gone straight to Reddit, because you trust a person way more than you're going to trust Gemini.
Right. But so the point is, even if this thing is producing use, in the Claude Code case, one of my understandings of your main argument here is that the current model is they are wildly subsidizing, because the compute is so expensive and intensive. In order to make it work, they have to wildly subsidize it on the consumer end.
Yes. So, really simple explanation. Anthropic has two, and OpenAI has this as well, two different kinds of customers. You've got a customer that pays you a monthly subscription, and you pay through an API. It just means connect the model to your thingy.
Right.
Now, when you use Claude Code, you're just paying a monthly subscription, $20, $100, or $200 a month. And then you have arbitrary limits that Anthropic doesn't really specifically say, but if you were paying on the API, so if you're paying for the tokens directly from Anthropic, you would be paying not $200 a month, but $2,700 a month.
Gotcha. Right. So these subscriptions are essentially massively marked down to get customers who subscribe.
Right, but there doesn't appear to be a way that you can. I don't think anybody that's paying $200 a month is going to go, yeah, I'll pay $3,000. That sounds great. I don't think that'll happen. And what it is an attempt to grasp the previous business models and use the previous growth trick, which is the enshittification, the cheap monthly fee, that they can then rise, and then they'll find ways of undercutting you.
Yeah, that was going to be my next question, right? So this idea of you subsidize users on the front end, you sort of lose money on every customer, you get enough market share that you could then get price power and increase. This is famously what Amazon used, which, lost money on every customer and every book it sold for a shockingly long period of time, and achieved pricing power. And it's also, Uber is another example, right? Where, people remember this time when Uber came about, where you could take an Uber, I remember
$5.
Yeah, I remember landing in cities when I was doing business travel. I mean, because New York, it was always
yeah, that was muddy.
It was relatively expensive,
yeah.
but still pretty cheap. But then sometimes you'd land somewhere and be like a $6 ride from the airport to the hotel. You think to yourself, wait, this doesn't make any sense to me. This can't possibly be the case that anyone's making money out of it.
But that, in comparison, it would be if like every Uber driver cost Uber $50,000 a day. It's the economies are just completely different. When Uber was subsidized, I think between 2019 and 2022, when they became a kind of messy profitable, like not a great one, it was maybe $33 billion, which is a lot of money. Amazon Web Services, arguably one of the single most important technological innovations ever, mostly done through just money and time. Though this isn't adjusted for inflation, in the 11 years, from I think 2003 onwards, they spent $38 or $39 billion in CapEx. For some context, OpenAI raised $42 billion in 2025.
So you're saying the scale of the subsidy here is just way bigger than those previous ones.
And the
That's
burn,
the point.
yes, and the underlying infrastructure, everything is more expensive, and it's not getting cheaper.
So if we talk about the front end model makers, right? That they're subsidizing, even in this filing, right? Anthropic, $5 billion in revenue, $10 billion in expenses. Obviously, that's not profitable.
And that's just the compute.
That's just the compute. So then there's the hyperscalers, right? Which are the physical owners that are built, and these ones to be the ones that are building the data centers, right?
In some cases, there's a lot of independent ones now
that are building data centers
in the hopes that AI demand arrives that doesn't exist. And people like CoreWeave and Nebius and such, who are just things called neoclouds, they just are warehouses full of GPUs that are technically data centers.
And so let's say I'm one of those and I build a data center. Did they then have a business relationship with one of the intermediaries like Amazon, or do they directly contract with Anthropic?
The answer is yes. So some of them do. Some of them, it gets even more complex. We don't need to go into it. There are people that rent the data centers who then sell the stuff. But nevertheless, that's actually kind of the problem. When you look at who's paying for AI compute, and you actually really go and look at like who's paying the money, there are really only two kinds of customers: Anthropic and OpenAI, or hyperscalers. NVIDIA. NVIDIA has agreed to spend in the next 5 years $26 billion in AI compute deals. And I don't think it's a good sign that the shovel seller is also paying for the digs.
Wait, take a second, because it's going too fast.
Fine.
So this is why. So NVIDIA buying compute is weird for this reason. I just want to walk people through this.
Real soon. Yeah, go on.
They make the chip, right? The chip is the thing you sell to the person that's going to say set up a data center, right? Yep. So in the ideal world, I'm NVIDIA. I sell a chip to the data center. The data center buys it from me because I make the useful thing, and then the data center sells its compute or rents it to one of the models, right? If you're selling the chip, why would you want to be also buying the power of the data center? And NVIDIA's made a deal where they're basically going to support the construction of a lot of data centers.
Yep.
Meaning they're going to be buying their own product, essentially.
Yes, they're feeding money to themselves.
Right. So here's some money for data centers so you can buy a bunch of our chips, which is a little bit like, it seems a little bit like you're just paying yourself for something.
So I'll give you the one that I think is going to blow up nasty. A company called CoreWeave, AI compute company. They're a public company. I think they lose money hand over fist, and they have tens of billions of dollars of debt.
And they're making, what do they do?
They just build, they have buildings, they fill them full of GPUs. NVIDIA invested in them.
Okay.
NVIDIA propped up their IPO. NVIDIA bought $2 billion worth of stock recently. And NVIDIA is also one of their largest customers.
Yeah,
their other customers are OpenAI, Microsoft for OpenAI, and Google, unsurprisingly, for OpenAI. I'm not kidding you. Google is renting compute from CoreWeave to rent to OpenAI.
Oh, wow. So there are people that are doing compute middlemen where they rent and then they rent it out to someone else?
And I don't want to get too deep into it because we'll be here forever, but there are also co-location companies who build data centers to rent to CoreWeave to rent to someone else. It's really bad. When you actually look at the non-hyperscaler or OpenAI compute, there's less than $1 billion of revenue on $178.5 billion of data center credit deals done in 2025.
Wait, say that again. Who has less than $1 billion of revenue?
Everyone, as far as people paying to rent GPUs. when you remove all of the hyperscalers and OpenAI and Anthropic,
Right.
it's less than $1 billion of revenue last year.
But doesn't that just mean that the big ones are driving all of the business?
Yeah, but the big ones are also not talking about how much money they... And in fact, the big ones are losing all the money, and the one spending the most money, OpenAI, is also burning so much money they need to constantly raise billions of dollars.
As they
some
just
of
did.
it coming from Amazon and Microsoft and Nvidia. At some point, you got to wonder if it's just the same billions being cycled again and again,
Right.
and nobody making a profit other than Nvidia. Nvidia is just printing money.
Okay, that's the one place. So there is one place in this that people are genuinely making a profit, which is, you know, I always use an example. I make a sandwich for $2 and I sell it to you for $4, right? Nvidia makes a chip for X dollars and they sell it to someone for 2X or X plus Y. They are definitely making a lot of money.
Panini press guy, the
Right.
Panini press maker.
Yes.
They are making the money, but the sandwich costs $1 and it costs them $10 to make. It's really bad, and their only customers appear to be themselves or very small amount of AI companies, all of whom are terribly unprofitable.
Right, so they're definitely making a profit, and what you're identifying as the weakness is the people they're selling to are not making a profit. So Nvidia is definitely making a profit. They're booking profits.
Yes.
That's
great gross margins as well.
Inarguably true. Their stock has gone up hugely because they're doing that.
Yes.
What you're saying is the people they're selling to are not making a profit, and at a certain point they can't keep buying if they're not making a profit.
Yes.
And then the people that are buying their chips that they're selling their compute power to, which are the models, are also not making a profit.
Yep.
And so at a certain point, the music ends and people go diving for the chairs, because if the models aren't profitable, then they don't need the data centers. And if the data centers aren't profitable, then no one needs the chips and the whole thing collapses.
There's also one abstraction that makes things a little worse, which is when I say there's less than $1 billion last year of AI compute revenue outside of the hyperscalers. What I mean by that is it doesn't suggest there's actually much revenue potential in renting an AI data center. Bloomberg reported this end of last year, $178.5 billion of data center credit deals, so debt, were done in America alone last year, may even be more. That's a lot higher than less than $1 billion. The other thing is, all of these data center debt deals are basically done by new companies, so all of the debt's kind of crap.
Right, so these new companies, basically what's happening is a bunch of new entrants are saying, hey, I can find a warehouse, get a bunch of GPUs, find electricity source, make a data center. They're entering the market and they're floating debt to make these new data centers.
Yes.
With the idea that when this all takes off, they're going to have a steady diet of customers they can sell the compute to.
Yes.
Because compute demand is going to go up and up and up. But if the demand doesn't go up, then that collapses.
And they won't be able to pay the debt that they raised from private credit that already has issues with people not paying their debts because their due diligence wasn't so good.
Right. So the way that your understanding of the sort of vector that this gets into something that's a larger financial problem. it's just not going to be profitable, and the whole thing is going to collapse in on itself.
Yeah.
Or you're wrong, and they get a lot better, and they are profitable. And what being profitable means is that they can replace the labor of tens of millions of people.
Right.
That's another cataclysm. Like, the point is that, like, if they're right, if the thing that they're promising, which is like, oh yeah, we could start getting rid of all these people that do all these jobs and replacing them with AI, that's good for the profitability of these companies, but I think it's probably insanely destructive to the macro economy and American society.
Sure, and I'm not afraid of that because
You just don't think that's going to happen.
You see no signs of it.
Right.
I think that
But it is the only way, like...
It is the only way it would make sense.
That's the point. The point is that, like, for the math to work out, it has to be something pretty darn revolutionary.
And it has to be trillions of dollars. Like, I worked it out mathematically. By 2030, for any of this to make sense for Microsoft, Meta, Google, and Amazon, they need $2 trillion of new revenue, not enhanced revenue. I mean, brand spanking new dollars. In a software industry that has never been higher than $700 billion of yearly revenue
in an annual U.S. GDP, that's like $30 trillion, right? Yeah. So you're talking about, like, just
10% of the world.
Right, an enormous part of the entire economy.
And it needs to happen
pretty quickly.
In the next 6 months. There is one other thing, though.
Yeah.
I think that there is a social contagion that will happen with this. Look around the world of bosses right now, and the amount of them who are like, oh yeah, I can't wait to replace everyone. I want to replace all the actors in my movies and replace all my workers. He's just going to give me money, and then I'm going to have all the money. And the pieces of crap I sell things to, there's hogs praying for my slop. The excitement in it. But also, how many of them are just wrong? How many of them just say things that aren't true? We have people in newspapers saying things about AI that aren't true. We have bosses claiming things about AI that aren't true. We have people lying about it. It's truly obscene, and regular people know. Regular people. Like, if you go and talk to, like, electricians, HVAC people, hairdressers, teachers, their reaction to this is horror. There are some who are using it to cut corners. Everyone wants to do that. Human beings do that.
Well, there's also a lot of people that are like, there's also a ton of people that have like crazily intense parasocial relationships. I
think that there should be criminal tribunals of the companies that it's disgusting. Anyway, I think that we are going to see something happen for the economic stuff, as an outcome of it actually, where regular people have seen how their bosses think. And it's happened for years. You saw it with remote work where bosses were like, hey, you got to get back to the office, man. You got to get back there. I got to be able to look at you every day. I got to be able to stomp around so you can feed off my mood. You got to go to the metaverse now because that's where I'm going to be. Have fun staying poor. You weren't in crypto. Also, I'm replacing you with AI. So you've got that. And then you've got the other thing, which is it needs to make all this money now. Next 6 months, OpenAI, even then, raised $110 billion. Actually, they only raised $15 billion. $35 billion of money from Amazon is due when they achieve AGI or go public, and both the $30 billion from Nvidia and the $30 billion from SoftBank are being paid in $10 billion tranches, like Klarna. Not literally though. And what's funny is SoftBank has to raise $40 billion in loans to pay for their part. Everything that's happening is a stress test of debt and equity. How much can venture capital spend? How much can hyperscalers afford? How much money is left in the coffers?
All right, so then what is that, out of your theory, what emerges as a prediction of the first place that you'll see a crack, a fall? Like, what would be the first sign?
We're already seeing it with private credit. So, I kind of hinted at it earlier. Private credit, private equity, massive. So many different software companies. And when they bought them with these leverage buyouts, they bought them, pumped them full of debt, and then took on debt to buy them. I've heard something ridiculous like private equity firms are leveraged to 4 to 6 times the value of their assets. So you're already seeing it. There was a stat that came out the other day. There's $42 billion of software loans just for software companies that are in distress status, so not likely to be paid.
Right.
You have, across the board, you can go and look inside there. They have to publish this. Private equity firms, private credit firms, and BDCs, business development companies, basically the same thing. They're suddenly starting to take payment in kind for loans, as in you get stock, given stock, and then you just kind of put all the cost onto the end of the loan. They're not getting paid on these loans. These loans are going they're starting to default.
So you think you're going to start to see loan default, like the private credit market is going to ripple first?
We're already seeing it. And then I think my three horsemen are, you're going to see a data center project fall apart before it's complete. You're going to see in construction one collapse, and then you're going to see a fully constructed one that has to shut down because it runs out of money. Because remember, these things are debt. They are heavily debt built. They are full of debt. Was that every industry could be softwareized, which is true. And as a result, we can grow forever. Private equity, venture capital bought into this thing, invested in all these companies. So now nobody will buy the companies. M&A has died, and it's harder to take them public. And if you can't take them public, you can't sell to someone else. What do you do? The answer is you sell it to another private equity firm. So this company again takes over inflation funds or secondaries, depending on who he was. Eventually, what's going to happen when you buy the thing?
And the other thing is that at the core of all this, whatever financialization, you have to make things that are profitable.
Yes.
I mean, that's like whatever financialization happens, you can have periods of where you can buy an asset and load it with debt and sell it to someone else, right? And there are ways in some intermediary sense you can make money off passing things hither and yon. But in the end, you've got to make money. Things have to be useful and make money for everything to keep going.
And the thing is, all of these investments follows John C. Tubman's statements. He said that the whole thing is that these software companies were required or invested in based on the idea that they would grow like they did between 2005 and 2018. Now they grow like after 2018. There's less money, and there's only so many software companies you build, and so many people can sell to. And if
the last thing to me that seems possible, just to end here, is that there's a sense that like sometimes they'll talk about their own vision of artificial intelligence or intelligence being like utility, like electricity or water. And what's interesting about that is that like utility companies aren't that profitable, and they're not that sexy, and they're not like. It's a strange thing because it seems to me like maybe it is possible this becomes like a utility that like everyone sort of has it or has access to it. But if that's the case, then it's basically just a commodity. Like it's not actually like utility companies are not super profitable. In fact, they're regular.
And that's the thing. The utility thing doesn't really make sense because water is an AI model and different things from utility companies that needs constant maintenance with model. Because otherwise it's just a static object that will respond to different things. You don't need to continually make sure power is power and something else. Yes, there are power regulations, I know. But one other very scary thing to add, I don't like scary but some of the money that's going into data centers now, or more in fact, Blackstone and so on, areas like that, is from insurance funds and retirement funds because they needed more liquidity than they had. So they started investing in private credit loans in the data centers. And the sales pitch is simple. This is the future. This is a good deal. You need more on the money. They don't need for us. They don't. They always be able to pay that debt. We mentioned Oracle earlier. Oracle is a mess, but Oracle has taken over $100 million of debt. They had negative cash flow, $24 billion. And they are building 4.5 gigawatts of data centers, hundreds of millions of dollars. And they built one company. AI lost at least $8 billion, more like $10 or $15 billion last year, and expects to burn $230 billion by 2030. Oracle will die if OpenAI does. This is not being catastrophizing. Mathematics. Oracle cannot be dead. OpenAI does not make more money than Nvidia does right now by 2030.
Yes, that's the bet. So their bet is on a revenue trajectory that is essentially unprecedented in human capital. They think they can achieve that, and they don't. That's it from most of the Better Offline podcast. Where's your head at newsletter? Great to have you here. prices, I could be like, okay, this makes sense. They must be by companies. We're not planning to spend anything. It's less than 3 months of the customers already taking what they have. And I think it's hilarious. I think it is genuinely, it is approaching the vindication out of me. It's down to core, joined by the manager of West Minutes and the Best Online podcast. That's interesting. Thanks for having me. Welcome back. I said, thank you very much. Before we get into sort of full science AI and considering using that choices, we kind of have to talk a little bit about SpaceX and the record as a recording. They've kind of just launched it. Considering the number of Hail Marys that SpaceX requires to be through data centers in space, how much of this market reaction do you think is from the fear of missing out on something like I think that's all that's driving SpaceX, because SpaceX used to be a rocket company, an internet company, like a satellite internet company. The only really profitable part of the company is Starlink. And then it's like, let's add a really bad social network, CSAT generating AI to it. And then they did that, and now that's dragging down losses by billions and billions of dollars. So the answer is, this is just exit liquidity for venture capitalists and Google firms. Only 5% of the shares or something. It's a genuinely dark day that this company was doing valuation. They almost actually changed be ashamed of themselves. Worse, they should be ashamed of themselves anyway, but this might be should be, because this is an unstable company, kind of Frankenstein's monster of bad ideas attached to the occasional good that is now allowing Elon Musk to become a trillionaire based on a company which makes for a total addressable market of $50 trillion. Data centers in space are pipe dreams. No one has ever done them. Like, because I forget exactly the science of it, I'm not a scientist myself, but people have talked about it and said that basically the amount of power it takes to actually get the data from space to Earth and also run GPUs in space, and that's what's required, would be in some astronomical figure for a single megawatt data center. And I mean, it's funny, we're having trouble building on Earth, yet people are yes, building in space, that works. So yeah, I don't know what SpaceX does long term. I think it is going to. I'm not a stock analyst. I don't really follow the markets in that manner. I will say I can't imagine it stays much above the 20-30% range today, because why other than I guess they can hope it becomes a meme stock, but Tesla only really works as a meme stock because they can sell cars, they can sell physical things. SpaceX is far murkier, but I think it will submerge them. I think that's the ultimate plan. And it's horrible. It's bad. Everyone involved should be bad. Goldman Sachs, I think, said they were going to 300x their AI revenue by 2030. Maybe said similar things. It makes you wonder if we even have financial regulators anymore. They just sit and work, kind of snoozing at their desk or smoking big cigars. It's a genuinely dark day. One thing I always wondered about data centers in space was how do you change out the what happens is you get someone in a rocket, which costs a ton of money for your low margin business. You get someone in a rocket, that person then goes up there, they change out the GPUs, which costs so much money, spending countless amounts of money. And also the other problem is, okay, you have to get a rocket to go up there. What's one thing SpaceX rockets are known for? That's right, exploding. Blowing up. So yeah, I hope that never happens again. If it does, change out the GPUs. I don't know, it just makes me wonder how there were regulations about companies not just making stuff up and releasing the public, but I guess that doesn't happen. It's just very strange, very dark, and very sad. Before we move on, just quickly, what do you think of someone having a net worth? I think it should happen.
being what's evidence-based, it just makes me so, it's so frustrating because the whole idea of Stardust and Eggs and everything else as well is that it's meant to be meritocratic. It's meant to be about survival of the best, the smartest, the fittest. And I don't think you can say Musk is the smartest, best, or fittest in anything. Not the fittest. And I think that he kind of neglects a wider topic. I don't blame Gen Z for being a nihilist thing. Getting a college degree doesn't mean that you guarantee a job anymore. You look around, you look at people who just simply work the hardest and they don't make very much money. You see the people who spend 90% of their life on XD everything out of being the drive to steal the job. You see that kind of coverage. And I'm being nihilistic too. And it's very frustrating because Musk has actually tied very dangerous things to SpaceX. XAI is a really bad business, very capex and opex heavy. And even the funny thing is with Musk is that he is not actually very liquid. He has huge wealth on paper, but his actual liquid capital is very low. He has a margin as a result. I imagine people assume SpaceX stock. The thing is, SpaceX is actually a very bad AI company. Costs are not now. They're renting out that. People obviously argue as well. They're renting out the space to have profit as well. So that's going to help. And probably another unprofitable company that costs millions of dollars. At some point, something is going to break. I don't know where it is. I really don't know when. I think the people have known for years, but I think that there is a point where SpaceX becomes salvage.
So seeing how the SpaceX IPO is going, how do you expect nuclear to go, assuming they continue security?
So, I'll lay my words here because I'm just looking at the stock tracker as we talk. SpaceX appears to be up 22-25%. This is a, to quote Matt Levine, it's the perfect rate. 20% means that you got a lot out of it, but you didn't leave any money on the table. You could price higher. Nevertheless, this is not a huge bomb. This is not a giant bomb. Maybe later in the day as the performance will change, but this is not like a huge one. So it is some investor skepticism. There's clearly that there isn't so much as about 30, 50, 60% is still running in a crazy way. This makes me feel that any appetite about their AI IPO, remember, I've actually got public yet. I've actually got to share their numbers. I think it might actually show a little skepticism towards those IPOs as well, because this is a good offering for us. This is not an amazing, it's one of the largest rates of all time, but the money for this had to come from somewhere. Selling off other equities, for example. The money for OpenAI or Anthropic would also have to come from somewhere. So it makes me think that the investor excitement is not quite there, or if it is there, it's not sufficient to help me turn this into just some insane rate, some 50%, 60, 70% offering. Not that those are common, but that's kind of what the AI bubble needed. They needed this to be bigger than ever. Still a successful Musk, which I hate to admit. I really don't like it. It makes me sad.
Let's move on to the price cuts then. You've got a great committee coming out of it next week. But just quickly though, the journal says OpenAI is considering massive price cuts to continue profit. Reportedly looking at doing the same. I mean, can these companies afford to cut their prices? Or given that enterprise backlash where they can make millions of dollars?
So this is the funny thing, and when I heard about this story, I'll be honest, I was surprised I didn't predict this, but that's because it was so stupid. So, midwits, recently they concussion sufferers, they will say, well, they're able to do this because the margins are so good, so they're generating tokens. We don't know that. We have no proof of that. We have no proof the inference is wrong. What I will say is that OpenAI planning drastic price cuts to people that Anthropic was allegedly voting for Journal, HAE and Virgin Journal. It's a funny thing. Let me tell you with complete certainty, nothing happened in the last 2 months that made their services cheaper. There was no breakthrough. We know that you tell us, they would be like, wow, we had a huge breakthrough that massively reduced the cost. No, what happened was, 2-3 months ago, everyone moved to token-based billing, and it's very clear, it's the only reason they're doing these discounts is because it's very clear that customer churn is happening. It's obvious that customers are burning through their budgets and going, yeah, I'm not doing that again. I'm not doing this again. What's insane about this is, cutting their pricing for OpenAI and Anthropic is likely to increase costs and lower revenue. Because let's assume that, and this is also a big assumption, let's assume that people use as many tokens unless the price cuts are so drastic, and that will increase token burn. But you have to understand that if they cut the prices by half and they double the amount of token spent, it's just going to massively burst their OpEx. It's not going to be like their revenue is not going to make up for it because they've already lost money. It's just a crazy thing that they're doing to the point, yeah, they might not be able to afford to not drop prices. They may have. It's less than 3 months that customers are already taking hostages. And so I think that this is a sign of the underlying economics of AI. The only reason they have to do price cuts, and they didn't, just to be clear, they did it almost immediately after their users started paying the real costs. It's a sign of the underlying economics of the world. It means that at scale, OpenAI and Anthropic's customers have massive price sensitivity. And at scale, these companies can't run with their current pricing. And if they lower the prices, the economics get so much worse. So very much worse. But then there's the other thing of, let's say they cut their prices by half. Does that necessarily mean people are going to use any tokens? Because probably making against the day, the prices that cost the cost. You can't say, if I do this, it will be nearly this much. It could change. Hallucinations happen. And if you are this one code, code change it. ChatGPT prompts the process differently. What have you? It's tough to measure up the task. You also can't really measure the return on investment. OpenAI has been over, so okay, now we can't measure how much task was, or indeed how much value you're getting from it. So why does that even if you cut it by half? Does that mean people are still going to be happy? Because think about it, you're spending millions of dollars. Okay, you cut that in half. You're still spending millions of dollars on something that will measure the ROI of. I don't think that OpenAI and Anthropic are doing this because they have a plan. I think they're doing it because they're desperate. And I think it's hilarious. I think it is genuinely, it is approaching the vindication out of me. Because, wow, it really took so little time. Brilliant. It must be, their customers must be churning.
And like you said, we have less than 3 months. And it's taking less than 3 months to get this one out. Well, we've messed something up here. We've got to give a discount. And you say 50% as a random number, I think random number. But would 50% even be enough to, I mean, what I think is a picture a year's worth of credits in a quarter of a year. So maybe they need to slash the 75%. I was wondering what kind of thing would actually kind of put customers at ease.
Yeah, that's a good point as well. Like, let's say over 3 months the entire annual budget. Yeah, you'd have to cut it by 3 quarters to make the budget work. Cool. So you just reduce, you basically make the same amount of money as Anthropic and OpenAI while getting just as much burn. It's just, they must require these companies to even consider this. I also thought if they can't do token analysis as well, they'll do so for startups. So on top of the enterprise customers that are paying, unless they just do the discount for enterprise customers, let's say you're a complexity or a cursor and everything's suddenly cheaper, those AI startups suddenly become a bit more economical. I don't think they'll become profitable, they become more economical. Other than the fact that their customers will now build tokens too, which burn all the AI startups, burn all the AI lab. It's a genuinely, it's one of those things that I have to do a double take on somewhere. It's just, if they don't raise prices, I'd be like, okay, this makes sense. People would be angry for lowering the fees. They must be really like, we're not planning to spend anything. Now, they could also do backdoor discounts. That's possible as well. But the words of the German were drastic price cuts, which would sound drastic to me.
You kind of said it earlier as well. Cutting the price would reduce revenue while increasing generally in this unit. But it's also, in researching this, I'm wondering if the very fact that people have now started looking invisible and non-existent at an investment in the AI adoption, will that alone start to make these companies seriously question why they're bothering?
I was kind of getting at this, yeah. Even if you discount it by 50%, you're still in a situation where people not measuring the ROI. Like, just because it's cheaper doesn't mean it's cheap. Just because it's less money doesn't mean it's valuable money. And I don't think unless the discounts are 90%, which will be economically unviable, I don't see how they. So I think that if, let's say, we go back to the 50% number, then I'm not confident that that will actually make customers spend as much. Their assumption, I assume, is that, okay, we discounted by 50%, okay, now they'll use it as much, if not more, making up the volume of money that's in front of them. I think that there's a chance that people pay less and use it less, which kind of doesn't also just not help. I also think that maybe, these companies don't know what this thing yet. Q3 must be a nightmare right now. They must be looking at the projections for next quarter and saying, oh god, no. Because the way that Anthropic and things sells their enterprise clients is they sign up for a minimum spend at the year, so $10 million. And they, in many cases, I've seen that they're charging more, not less, tokens of the rates. I reckon what's been happening, just a guess, I reckon people have hit those maximum, those minimum spends, and they're going, no, just like, we're going to spend a bit more, but we're capping everyone, and we go actually have a conversation with their accountant and say, like, hey, this is not economically viable for us anymore. I mentioned this in the recent piece about AI slowing down. This is at the worst possible time for the company. The absolute worst. Because even if you're one of the eager-sniffing people for these AI is the biggest, prestigious thing ever, Anthropic and OpenAI need to make by 2029 upwards of $350 billion in annual revenue. They have $1.1 trillion in compute. Then they must keep up with the only way to keep up with those is have massive revenue growth. Anthropic, I think they're claiming they'll make $10 billion a year. That is not even close to the number. By 2030, these companies need to be making about $10 billion a month. It's the only way, actually, 2029, that's the $10 billion. And they need, how are they going to do that? They're discounting it. How are they going to do that when their customers already use it?
And I think that this is just people go on Twitter and people are saying, oh, it's a strategy, oh, it was a madness, or they have some conviction away from this. I think people realise that the most likely answer is nobody was a madness. It's not, oh, they're going to get bailed out by the government. It's, they never thought about it. They just keep raising money, keep spending money, and then something will happen. So I think
back and go, whoa, reducing prices anytime soon? Can I get those reduced prices? And here's the thing, how do you sell against that? Because the mystique and the magic of AI is kind of picked up. I know I was excited about this anymore. Very strange people on X. And so it was just a very strange time. I genuinely didn't see the price cuts coming. I thought that they'd do that much earlier. To do it at this stage is just desperation stage.
Given what you just said, Cisco's chief of recently saying that total costs are far higher than the actual value that they are producing at scale, how close do you think we are to enterprise contracts being cancelled, to your point, being delayed as they get 75% discount not using AI really?
I think next week will be very telling, but I think so. And AI all over and not giving out $1,000 worth of bonuses to any organization, any business that uses $1,000. Well, check this out. What do you think? It's free money for some reason. I sure hope they don't book that as revenue. That would be illegal. But on that side, they could actually start taking a look at as revenue and maybe want to sell marketing costs. But man, is that a dodgy business? Nevertheless, I think we must be already now. We're getting close to that. Because my rumor is resting price does from AI squeeze and profit doing the same thing. Even the rumor is a sign that they're freaking out, that they're actually trying. They may, I don't know if it leaks. I don't believe this leaked. If I was in trouble for OpenAI, was the wrong guy to have this leaked. I think that this is just a result of desperation. And I mean, there's enough. The amount that they basically have to give away money to get people to pay up. And you've seen this also with the, I don't know, subsidized rates as well. But it's very clear that the underlying economics of AI never have. They worked, they wouldn't have to do discounts to low and the side rates otherwise. If the economics made sense, they would have a subsidized rate. And I think that it's very vindicating and arguably a great deal watching again and again things that I've been saying come through. I know a lot of the listeners will be excited about this and they're excited together. But it's funny watching the entirety of Silicon Valley be like, we say profit, revenue minus cost of goods sold. Interesting. You want that to be a positive number, you don't want that to be a negative. You don't want a negative profit? Right, but what if my business only loses money? Oh, that's bad? Didn't really think of that one, but let me get back to the solution. And it's very much I think now straight up him just saying like, yeah, we did way for business. Cisco, don't hold on Cisco. Cisco was the biggest of them. He's like, yeah, mate. Anybody who's with lost faith how the business model right? And he said, yeah, you need like a miracle of economics to work. It's not AI just be like, nah, mate,